again for another Sunday night video. So let's get to it, shall we? Well, this last week, we had the volatility. This last week, I expected to see the week prior, options expiration week. That was the kind of stuff I was looking for the week prior. Big up day, big down day, big up day, big down day. Instead, we had it this week. And what it was attributed to, Bove came out, made a statement. Certain things in the market came out all week. Housing numbers came out worse than expected. Some numbers came out better than expected. Amazon blew the door off earnings. Google, all the tech earnings, all the stuff like that moved this market. But it didn't move it the way we expected. In fact, it was inverse. Amazon, the next day, the market was down big. So there's something going on. I don't know if it's a change of sentiment yet. I don't know if there's just some profit taking. We're not sure. But this market is moving, and it seems a little more volatile than it has been the last few weeks. So let's jump into it and see what we can see. Let's start with my old favorite, the VIX. You can see how the VIX is. You see, we've been charting the snot out of this thing the last few months, and it's broken every support we've ever put out there. And this was the most recent support, which I thought was forming a nice support here right around 2090. Didn't take long to breach that and close beneath it. But look what we formed here. Made another support, or a tweezer bottom here. Almost identical candles. Tweezer bottom type pattern right down here at the, we're going to call this 2030 area. All right, so 2030, we should be seeing a bounce off of here. This should be a signal for a move up. Okay, coming down, closing exact same, opening here, going down, touching, retracing the same, blowing back up. If it would have came up here, it would have been real freaky. But we're probably going to see resistance at this 2277. If not, we could have another great big candle just like this blowing us through. This black candle sandwiched between two big positive days here. So you can see the volatility has increased just by the size of the candle bodies here the last 3 days. So could very easily see this thing blow back up through this right here. We could also see it drop back down, but we got several support areas in the way, so I'd be more apt to see it follow through off this bottom with a move to the upside. Therefore, ergo the market moving down. Looking at the Dow, I've talked about this before. These moves here are the same distance types of moves. Okay, this move up from down here in this area, which is 91.22. Up here to 96.23, and then from down here at 92.52 to 98.50. So we're looking for the top. Remember, I said the top would be about 10.0750 or so, or 50 points higher than that. But we're in the area, and we definitely formed a real nice top here at 10.123. All right. So if things hold the pattern, if we went off this top here, okay, this is 9900, 9917. We went down here. It bottomed out at 94.28. All right, so 500 point move somewhere in there is what we'd be looking for. All right, so we're going to be looking for a stall out, which coincidentally would probably be, what do we say? This is 10.120, so that would be 10.6 or 9.6, somewhere around there, which would be right in this area here, which would be a real good area for a bounce if we continue to sell. So anywhere in this area here would be a real good area to watch for a bounce. Obviously, if we break past this up here, we're going long again for probably another 200, 300, 400 point move. All right, so let's look at the SPX real quick. All right, S&P 500, not as strong as the Dow. We got a little bit of a top here. Real nice, not real nice, but a nonetheless bearish engulfing candle. This would have been more appropriate if this candle was a bearish engulfing candle. It would have been a much stronger signal. Since we're moving sideways, it's not quite as strong a signal. Nonetheless, it does show some bearishness in this market. You can see I've got two trend lines here. The first one is the log trend line. This one is the arithmetic trend line. All right, so I just have them both up there. The log always gets breached first. The arithmetic would be the safer one. So the log's already been breached, and I wanted to just see. I'll turn this off for you so you can see. All right, so here's your arithmetic. Here's your logarithmic. All right. Anyway. Got kind of a bearish engulfing, looking for a breach of 1074 here. So I would hold to the same theory. If we do, it's going to be the same percentage type move from 1079 to 1020. So 59, 60 point move down. All right. So, and that would be from the peak here at 1099, so 1100. So 1040 somewhere in here, right in this area here. All right. which would coincide with a 50 moving average, which would make sense. things are making sense. So we're just laddering up, and until we break through that, we're going to continue to do so, I believe. NASDAQ, same type of thing. We have our pennant. I put all these in just so you can see the numbers, you know, if you want to pause and look at them. I don't have time to talk about them here. Same type of thing here. Here's our bottoms and our tops, and you can look at the distances and see what we're doing here, all right? So just looking at the distances, I could probably put another one in right about in here, all right? Same type of thing, formed a nice double top here. I got to pause for a second because I'm going to cough. So, sorry about that. Double top, 2192 area. And it looks pretty bearish candle. It's not an engulfing. It is definitely has a dark cloud cover of this one here. And it is pretty big, okay? It's a big candle. So, again, just watch for these supports to be broke. We did break one of the main ones already, 2162. If we break below this 2145 area somewhere in there, I think we're definitely going down into 2075 range. Somewhere along that line. Let's look at one more just because it looks more bearish than all the other ones to me. And messing it up, Mr. J. Alright, here we go. This is the Russell 2000 index. Alright, here you go again. Trendline bend broke. Remember I talked about this, I believe, last week. Nice 3 hits of the trend line, good trend line. First breach off the 50. Now we've breached it again for the second time. We've even breached this long-term support line. And we have a pretty decent bearish engulfing candle here off of an up move day beneath the 20 moving average. We've got the 50 moving average to watch for as support. So I'd be watching the 50 for support. After that, you'll be watching for this low here. And then after that, I think we're in for a down move here. This looks pretty toppy to me. A lower high or pretty darn close to the same high. Maybe a double top type formation forming here. So let's watch for this break through this fib, this 558. See if it comes to fruition. I do think we're going to hold out or stall up here on the 50 moving average. All right, I better get to some stocks. I went way over time and all that. Didn't expect to go that long, so we'll talk about these real quick. XAU is the gold silver sector. Basically, all I'm looking at here is just a real nice range bound. Stalls out a little bit on the 50s and the 20s, so watch those. But you got a bearish engulfing. Those have been all over the charts, the bearish engulfings. Looking for this to keep going down. MOO. Alright, this is very low volume, 461, so be careful. Could be very volatile. Same type of thing. It's just a range bound type stock. It's going up this uptrend line right here. Actually, a little bit of a pennant with a breach up here, but you got a bearish engulfing near resistance. I like this to retest the 39. I like how the trend lines are coming together, signaling a downturn on this MOO. Let's look at the OIH. This is one I watch pretty regularly. You've seen me post, if you follow me on Twitter on Dig and Dug. I watch those a lot. The same type of thing. We did have a breakout, but not a solid breakout. No follow through out of this range. Now we've got a nice bearish engulfing candle on resistance. This is all signals heading down. The only thing is the moving averages are actually separating a little bit, which is usually a sign of strength. But I like the volume here with this down move. So I'll be watching this to go to the downside there. Let's go with some spider sectors. XBI. This is the XBI. Just the facts, man. I like this because it broke through the 200 moving average. You can see it offered support here. Came back up, retested like we like to see. Broke out of this nice little pennant here. Broke out hard. Bounced a little bit, hung here. Now we've got a bearish engulfing down beneath the 200 moving average. I think this is a pretty good breakdown of XBI. So keep an eye on it. Probably get one of these down moves with a bounce and a retest of it before we go back down. But anyway, I like that break beneath there. And two more. Liz. Same type of thing. Just a nice bearish engulfing candle at the top of an up move. Look to retest this $5 area here. Then one more for my buddy. R Dizzle asked me to throw Digital River up here. It's one of his favorites. He was almost going to be in puts right here, and he would have been very happy. This thing broke down big time. Okay, big time here. It's got earnings coming up in a few days, so watch that. But we're looking for support down here, so it'll probably be a good move. This stock likes to trade in ranges, as you can see. So let's watch for support here and look for a range-bound move. So that's it for the week. Watch out for the news coming out. I think the, what was it? The consumer confidence is coming out. We got durable orders, new home sales. The one I think be interesting is the durable orders could be interesting because they used to be negative, now they're predicting positive. So if that comes out worse than expected, it should move the market down. That's it. The AK option trader. Trade well.